Right, so how does one reverse major trends? Okay, it's very seldom that you're going to go, you'll do this on a 15-minute chart, surely. Right? You'll do this on a 15-minute chart that you do this sort of thing. Thanks. You'll do the V top and the V bottom on a 15-minute. But on a weekly basis, almost never. In fact, never. Yes, never. Alright? To reverse a major daily/weekly trend, you generally have to do the old down, you know, very bearish, very neutral, and then you get the little, you know, hello everybody, and up she goes. Alright? And this little whip-de-doo on the downside, oh, I see. Thanks, Don. So, so this little whip-de-doo here is typically, you know, I don't know how to explain this. We call this the kick you in the teeth setup at FxBootcamp, right? Because if you have something like this going on, price continues down, and then you get this little continuation flag, basically at support, price will generally do sort of something like this, right? Catch everybody out. Oh, look, it's breaking to the downside. No, it's not, and up it goes. All right. So what I'm trying to say is, I think that this euro-yen is in this phase. I think it's in this neutral phase. Alright? And fundamentally, sorry to break it to you, but the euro is still rubbish. Okay? The euro is still kind of crummy, guys. Believe it or not. It's just that the USD happens to be crummier of the last little while. Which is saying something, because it's not easy to compete with the euro in terms of rubbishness. It's a pretty tough crowd, that. Right? No, I think the ZAR is worse because it's got further to fall. Yeah, no, it's actually not such a silly question, because if it's all about yield. That's all that really matters. And if you've been up there at 5, 6, 7%, you've got further to collapse to come back to zero. Therefore, you're going to fall faster relative to those that are already there. Right? So anyway, so what I was getting at is that on the euro-yen, yeah, we're kind of very bearish, and now we've gone into a more neutral phase, and now kind of bullish, right? And I know some people like to look at this sort of thing, and I do the same. All right? A little envelope, right? And this is nothing more than moving averages, 5 to 10 EMAs apart, you know, 5, 10, 15, 25, 5 to 10 deviations apart all the way from 5 to 100, right? It looks all pretty colors, but the bottom line is that when they're all established on top of each other in one direction, price is generally trending, and then when they break and cross below each other and then retest, they're generally trending in the other direction. All right, that's the raw sort of thinking behind it. And the only reason why I pull this up is because it's a good visualization for what's going on. All right. Now, on this, we have still got, for the most part, yes, we're crossing through each other now, but for the most, and moving averages are tremendously lagging, but I think that there's a lagging benefit in this exercise, because the trend is the trend until it's not the trend. And when you have such nice lagging moving average, you know, lagging indicator like this, the trend really has to establish itself and prove itself for things to change on the indicator itself. All right. Now, I'm not using this as a trading. I'm not using this as a trading instrument. It's simply a visual representation of prevailing trend. All right. I like price action changes of trend, but this is a nice way to look at it anyway. All right. And what do we notice with this? Is that the medium to longer term moving averages is still categorically pointed to the downside. It is, however, the first time that we've really prices broken definitively above the envelope. It threatened to do so here, but now it has. Right? We've closed candles above there. However, it's very obvious to me that we are in this neutral phase. And neutral phases are trends. You'll get small retracements, large extensions. However, neutral phases is characterized by large gyrations of very little. Okay? And I think, it's my 2 pips, that we are in large gyrations of very little here. So you're going to get more of this sort of thing. You're going to have brilliant sort of 3-week trends followed by a big fat kick you in the teeth reversal. Okay? And I think that we probably just about due for one of those. Alright? I think that we'll probably try and push up next week, somewhere into sort of this 113 zone. Let's go back to this chart, which makes a lot more sense to the average human being. Alright? And there's no question that we had a ton of resistance here around sort of 111, 112. It's a weekly area. Whenever you're looking at a weekly resistance point, you figure literally that this is about a 300 pip area. Seriously. Right? Because it's, when you're looking at more intraday stuff, it's a more solid spot. It's more specific. When you're looking at weekly areas like this, you're talking about a spongy zone, right? Price could go all the way into here, and then all the way back down, then you're going to look back on this and say, oh, look. Oh, cool, look, we held this area. Meantime, you looked at it as 112 and it printed 116. But on a weekly basis, it's still ultimately going to hold it, right? Make sense? Okay, so I'm still of the opinion that this euro-yen is probably going to do a little something like this. I think it will print a higher high, but ultimately then we'll head, down to about $100. And then we'll see what it wants to do after that. Because there's a lot of things affecting the yen. Obviously the yen itself is the principal, right? You guys know this trick. Okay, if you take this to parties and you show your friends, you will impress them, I guarantee you. Okay? If you take the price of the euro dollar right now, which is 1.3082, alright, and multiply that by the price of the USD yen, which is 83.53, you just so happen to get the price of the euro yen, give or take spread and deviation from the time you did the calculation. Alright, so what is this proving to us? Is that the yen is actually a figment of your imagination. The euro yen. It actually doesn't exist.